Welcome back, investors, to Ticker Time News. I'm Adam, and I've gotten quite a few requests to look at Hyliion Holdings, ticker symbol HYLN, and that's exactly what we're going to do today. Now, researching the company, you'll find that Hyliion is a speculation play, as they're not expected to make any meaningful revenue for the remainder of the year. With that said, they have what I think are interesting products with their Hypertruck and newly updated version of their hybrid EX and a sustainability-focused hybrid powertrain. So let's look at Hyliion's financials and stock chart through the lens of valuing a company pre-revenue. Now, before we get started, smash that like button, share this video with your friends, and click subscribe to join our family of investors. Now, let's get started. To give you a quick idea of Hyliion, they manufacture hybrid and electric powertrain for big trucks and have hybrid technology for tractor trailers. They went public through a SPAC in late 2020 that netted them $560 million in cash proceeds. When I consider investing in a pre-revenue company, I look at a few things: the people involved, the products they're developing, and the financial situation. I also look at the market and ask myself if this is a product that can disrupt the industry. Now, the trucking industry is a big and well-established industry, but it's also severely fragmented. Now, financial theory says the value of any company should be equal to the present value of its future income. For publicly traded companies like Hyliion, investor expectations of future performance are usually reflected in the company's stock price. Hyliion is currently trading at $8.50, but what about companies with new technology and no revenue? How do you determine the value of that company? Look at Hyliion with a market cap of $1.5 billion. Well, thankfully, we can draw from the experience and wisdom of other entrepreneurs, investors, and academics. Over the decades, they have shared theories and strategies that we can use to help us value pre-revenue companies. Here are 4 strategies that you can use to value a company pre-revenue. An angel investor, David Burkus, created this company valuation back in the 1990s. Then in 2016, he updated this method to be more flexible. His method does have a hurdle, though, to filter out smaller investment opportunities. For a company to be considered, you have to be able to vision that company reaching $20 million in gross revenue at the end of its 5th year of business. Now, if it can meet that or exceed that hurdle, then you can go through and evaluate that company on a sound idea, a product prototype, quality team, quality board, initial sales. When you add this up, you get to $2.5 million in valuation. Well, Hyliion's valued at over $1 billion, $1.5 billion. So it doesn't exactly fit into these methods for valuing a startup. But it can give you an idea of what to look for when you're trying to value a company pre-revenue. Then there's the scorecard method. Bill Payne created this, and he updated the Burkus method. And then we get to the next one, which is the risk factor method. The risk factor method took the Burkus and the Payne method, and they combined them together, and they added a few more factors to it. So like I said at the beginning, they're all built off of the Burkus method for valuing a company. And then the 4th model is the venture capital method. And this one has been created by pulling together different venture capitalist ideas to create a formula As you can see, it's a very similar method to our first, second, and third method for valuing a company. It just allows for a greater valuation like Hyliion. I'll leave a link in the description below so you can come check these methods out. Now, let's look at the financials for Hyliion. So Hyliion beat Q2 EPS by 9 cents a share with a loss of 13 cents. Hyliion ended the second quarter with $317.7 million in cash on its balance sheet. Now, even though Hyliion expects to begin generating revenue from its improved hybrid product later this year, it does not expect the revenue generated this year to be material. Hyliion expects full year 2021 operating expenses to range between 130 million and 140 million, a reduction compared to previously disclosed guidance of approximately 140 million. So Hyliion is tightening its belt, which can be seen as financially responsible or a potential sign of a hiccup. On the stock chart, Hyliion is in a descending triangle. This represents a bearish downtrend. But on the bright side, on August 19th, Hyliion hit a bottom of $7.77, and volume picked up pretty dramatically. Volume also sent the stock on a quick breakthrough of its trend line earlier this week. Next week, we need to watch the 20-day and 50-day moving averages. They keep grinding it out, and the 20-day moving average keeps getting rejected by the 50-day moving average. If you're a Hyliion bull, you want to see the 20-day moving average break out again and push the stock price up to its resistance line. Now, I'll ask you, what do you think about Hyliion? Since Hyliion is a speculative play, for now, it will come down to whether the Hypertruck can sell. With the main components supplied by Dana, the Hypertruck will be a well-built and reliable truck. If it can sell, then this is a wildly undervalued company. Thank you so very much for watching, and I will see you in the next video.